Hi guys. Today we will analyze Devon Energy stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Compared to the overall market, the stock is showing a nice and steady performance. The short-term trend is neutral. The long-term trend is still positive. So although the long-term is still positive, this may be a trend turning. Strong support levels are around $50 and $45. Next strong support level is around $39. Resistance level is around $60.50. In the last month the stock has been trading between $50 and $63 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 15 million. This is a good sign as it is always nice to have a liquid stock. Prices have been falling strongly lately, it's not a good sign, be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 33% per year, for last 5 years. We see that the average profit margin of the stock has been around -7% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 101% per year, for last few years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Devon Energy Company: bad, average, and good. First scenario. Devon Energy will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 4%. Future profit margin would be a low, 6%. Future free cash flow to net income rate would be a low, 80%. In this case, the fair value of the stock today would be $15. Second scenario. Devon Energy will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 11%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $22. Third scenario. Devon Energy will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 16%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $31. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 4.18. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Devon Energy, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 8. Again, I will use 3 different scenarios for Devon Energy Company: bad, average, and good. First scenario. Devon Energy will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 4%. Future P/E would be a low, 8. In this case, the fair value of the stock today would be $17. Second scenario. Devon Energy will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 10. In this case, the fair value of the stock today would be $25. Third scenario. Devon Energy will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 12. In this case, the fair value of the stock today would be $36. As you can see, today the stock is overvalued, $53, even if we expect the company's high performance in future. Based on estimates for the next 5 years, Devon Energy will show a small growth in revenue and earnings per share. Also, there are some minor concerns on its financial health and profitability. And the stock is currently overpriced. I may consider buying the stock for the dividend, 7.5% yearly, when the stock drops below $35. Company's strengths. Devon Energy is a leading independent energy company engaged in oil and gas exploration, production and property acquisitions. Devon acquired WPX Energy in January 2021, and is now a leading U.S. unconventional oil producer, with a premium acreage position in the Delaware Basin. Devon has a portfolio of top-tier assets, mostly located in shale-rich basins with relatively low extraction costs, that provides the company with a competitive advantage. The swing to profitability was driven by higher prices for crude oil, natural gas liquids, and natural gas, as well as by higher production. Devon has a return on assets of 13% and return on equity of 30%. This is amongst the best returns in the industry. Devon has a profit margin of 23%. This is better than the industry average of 9%. In 2022, Devon will continue to prioritize free cash flow generation over volume growth. The stock has a yearly dividend yield of 7.5%, which is a nice return. It pays out 46% of its income as dividend. This is a bit on the high side, but may be sustainable. Risks. As with all independent exploration and production companies, Devon's profitability depends on the prices of crude oil, natural gas and natural gas liquids. Commodity prices can be highly volatile, making revenues, earnings and cash flow unpredictable. Unexpected regulatory changes that create headwinds for the development of Devon's unconventional acreage, particularly on federal lands. Difficulty in replacing reserves, and rising cost inflation. Even though at present the Devon Energy is still leader in product innovation in the oil and gas operations segment, it is facing stiff challenges from international and local competitors. Based on estimates for the next 5 years, Devon will show a small growth in revenue. The revenue will grow only by 8% on average per year. In the coming 5 years, the earnings per share will grow only by 7 to 10% yearly. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.